Hello guys, and you're welcome back once again to LearnCity. In today's intriguing class, we are going to talk about company accounts. In talking about company accounts, I'm going to talk about the formation and terminologies, and also the preparation of simple financial statements. So, let me now take you guys into the introduction to company accounts. Generally, company account is also known as corporate accounts or corporate financial reporting. And company account, it refers to the financial records and statements that are being prepared by companies to systematically record, report, and analyze their financial transactions and performance. And these accounts are essential for both internal management and external stakeholders, such as investors, creditors, and regulatory authorities. To assess the financial health and activities of a company, companies' accounts can help in evaluating the profitability, the liquidity, the solvency, and the overall financial position of a company. So that's that about the little introduction of company accounts. I hope that one was taken. Let me now go into the formation and terminologies of company account, because I said it earlier that I'm going to talk about it. So the formation of company accounts involves some kind of several key steps and terminologies. Well, I'm going to break this down in this lecture. The first one is the incorporation. A company is formed through a legal process that are being called incorporation, where it becomes a separate legal entity that is distinct from its owners or stakeholders. Let me explain this in layman language. If a company is being situated or erected or founded, the company is a separate person. We call company is a person. It's just not the person that is breathing. Company will be treated as a separate legal entity on its own, other than the person that ever used money to build it or the shareholders that are subscribing to the company. Let me go to the second one. The second one is the shareholders or owners. These shareholders or owners are also known as the stockholders, and we refer to them as the individuals or entities that own a share of the company's stock, thereby representing ownership interest. The third one is the board of the directors. What I mean by board of the directors, a company is governed by a board of directors that have been elected by the shareholders I gave earlier, right? And the board we are talking about, they are responsible for the decision making and overseeing the company's management. That's the work of the board of directors. Let me go to the fourth point. The fourth point is financial year. The financial year is the accounting period for which the financial statements are prepared. It can vary, but it is typically 12 calendar months. Let me go to the fifth one, which talks about financial statements. These are the primary documents that summarizes a company's financial performance and position. And the key financial statements include the points I'm going to talk about now. The first one is the income statement, that is the profit or loss account, right? And this income statement, it shows the revenues, it shows the expenses, and the net profit or loss over a specific period. The second key point is also shows the balance sheet. The balance sheet, as we know, it provides a snapshot of the company's assets, the snapshot of the liabilities, and also the snapshot of the shareholders' equity at a particular period in time. The third key point under it is also cash flow management. What I mean by cash flow management is quite simple. Details in the inflow and outflow of cash during a given period is what we refer to as cash flow management. And the fourth key point under it is the statement of changes in equity. This explains the changes in shareholders' equity during the period. That's just the idea behind the statement of changes in equity. So the sixth point, as I was talking about, is the auditor. When we are talking about auditor, an independent auditor is often appointed in order to review and to verify the accuracy of a company's financial statements in order to ensure compliance with the accounting standard and regulations. The seventh point is the dividends. When we are talking about dividends in finance, dividends are kind of payments that are being made by a company to their shareholders as a kind of distribution of profits among them. That's just that about dividend.